Hey, what's up YouTube? Houston here. For those of you just found my YouTube channel, welcome. Please remember to hit that subscribe button and that bell. And for those of you that's been following me and supporting me, salute. And for my favorite patrons, always, double salute. Now, today's video, we're going to be talking about how to start a business in Florida with bad credit. Okay? Now, understand that we're talking about what is the best state to set up a business in, best lendable NAICS code, the best banks you should open up your first business bank account with, which net 30s are the best for your new business, the easiest first business credit card, and what business lenders you should get your first business loan from. Now, here's the thing about it. Do not create an LLC or INC or S Corp in these states: Nevada, Wyoming, Delaware, South Dakota. Here's the reason why, okay? If you are residing in Florida, okay, and you register your business in one of these states, well, if you're not actually doing business in either of these states here, you're actually piercing the veil, okay? So that means that you will not have any legal protection, all right? And for most part, most people, they would buy companies or have companies set up in these here states, and the companies they go through, they won't tell them that. They'll set it up as a registered agent because they're getting paid, but they won't tell you that, hey, if you're not doing business in this state, you actually don't have any protection, legal protection, okay? Another thing that you have to understand about doing business in these states, and say that you are in Florida operating your business, is that if Florida have any type of programs for small businesses, then it's up to Florida's discrepancy if they want you to participate in those programs, okay? So if Florida is giving out $10,000 grants to small businesses, right? The thing about it, because your business is registered in another state, then you may disqualify yourself for that grant. All right, so that's the reason you can be missing out on money. Also, without you filing taxes in both states, you also can be fined for that as well. All right, so again, if you're setting up your business in Florida, then you definitely want to make sure that the business is actually operating in Florida. Don't do one of these companies that set up in these other states if you're actually not going to be doing business, okay? Now, here's another thing following up to that. A lot of people, they would buy these chef corporations, and they figure like, oh, okay, I can jump ahead of the game and get funding and stuff like that, right? So that's the reason they buy these chef corporations, and granted, they're in another state, because they're like, wait a minute. If I buy it in this here state, I'm not paying any business taxes. And like the state of Florida, they don't have any state taxes, right? Well, here's the thing about chef corporations. 90% of the time, when you buy a chef corporation from somebody or a company, they didn't keep up the taxes, okay? That's one thing. Number two, they didn't open up business bank accounts, all right? So when you're trying to get funding, those are the two primary things they're going to ask, okay? What are the taxes, and how long has the business had its bank account open, okay? And for most people, they're selling these chef corporations, but they're not telling you that. They're not telling you that because you don't have those two primary things, that it's going to stop you from getting funding. All right. So you have to be careful. If you have questions about setting up a corporation, or if you already invested in a chef corporation, I'll tell you another thing that's very dangerous about chef corporations. You can buy a chef corporation. Now, the prior owner may have gotten credit cards or lines of credit or loans from that chef corporation, and they never paid it back, right? They defaulted on it. Now, when you take over that chef corporation, you reactivate it and everything. Well, that debt can actually become your debt, and you'll end up paying that debt. So that's the reason I tell people you have to be very careful when dealing with people talking about they sell chef corporations. And you need to know exactly what it is that's been going on with that chef corporation, okay? Now, let's talk about choosing a lendable NAICS code and why this is so important. If you're trying to get business funding, okay, for your business, your new business startup or whatever, all right? If you're trying to get business funding, this is so important, so you got to pay attention. If you choose the wrong NAICS code, okay, it can disqualify you from some lenders of giving you funding. Like restaurant, right? Well, with most banks, when they think about a restaurant, somebody going to them getting a restaurant, because restaurants are high risk NAICS codes, all right? Restaurants have a 90% failure rate. Because of that, it'll make it harder for you to get funding. Now, if you, instead of you using a restaurant, then you want to tell them that you're starting a food distribution business, okay? There's a difference, and that's what you really need to understand is the way that you approach it. So you're in the food distribution business. You don't have a restaurant, okay? That's just a tip. Now, let's talk about actually setting up the business. When you set up the business, all right, depending on what type of structure you use is also something that can be challenging for you, as well as getting the maximum amount of funding, all right? Also getting the EIN number. Now, some people say, well, I have a sole proprietor, I have an EIN, I want to actually incorporate the business or turn the business to an LLC, but keep my EIN number. No, you can't do that. If you do that, you can potentially create an IRS audit because you're using the wrong EIN number for that business structure. So you don't want to do that. So again, if you have questions about properly setting up your company, click the link in the description and schedule a consultation or go to the websites. All right. Now, opening up the business bank account. This is so important because a lot of people will not follow this. All right, they'll go to the smallest bank or whatever and open up a business bank account, but it actually could hurt them. Here's the reason why. This list of banks that I'm talking about right here, you want to start with one of these, and you want to start making weekly deposits. The reason is doing that strategy will help you build up your business credit and help you acquire business funding much faster than going through Dun & Bradstreet and a paydex score. As a matter of fact, a DUNS number and a paydex score is not more important than that SBFE, which stands for the Small Business Financial Exchange. Okay, Small Business Financial Exchange actually feeds the information to Dun & Bradstreet. That's one of the sources that they get their information from. So you do not want to focus on a DUNS number and a paydex score. You want to focus on making sure that you get your business bank account open and you're making weekly deposits. All right. Now, talking about net 30s here in reference to there's a lot of companies out there that's offering net 30s. But what's happening, a lot of these companies now, where it used to be one and done, you buy from them one time and they report and then they don't hear from you anymore. Well, that's no longer the case. Right now, a lot of net 30 companies and stuff, or net 15 or net 20 company, they want you to buy from them multiple times before they report. Also, some of them are charging an annual fee from anywhere from $59 up to $99, right? So these here net 30s here, they report, and I would tell you, these are the ones that I would probably start with, okay? The reason is because if they're reporting to those business credit files and your bank account is reporting to the business credit file, it helps build up your business credit and business funding opportunities much faster, okay? Now, let's talk about your first business credit card. I would tell you, if you have bad credit and say that you're about at least a 580, I would probably apply for a Capital One, this Capital One Spark Classic business card. And the reason is because it's going to report to the business credit bureaus. So even if they give you a $300 or $500 business credit card, utilize it, pay it back, utilize it, pay it back. It's so important because you want that data reporting. All right, so you must be willing to actually use whatever they give you, because it's going to open up the doors for you to get access to more business credit funding. Now, Wells Fargo, they have a secured business credit card. Okay, so if you can't get the Capital One unsecured with a 580 credit score, then I would go over to the Wells Fargo. Okay, Wells Fargo, their cards go from 500 up to 25,000, but again, they still report. So that's the whole name of the game. Does it report? And the more opportunities you have your business accounts reporting, it helps build up your business credit, and opportunities come for you to get more business funding. Now, let's talk about Divvy. Divvy is a fintech company, okay? And they offer lines of credit, all right? And so if you can't qualify for that line of credit, they do have something called the Credit Builder program, where you actually using your money like a secured money, but it still reports. That's what you want. You want accounts that are actually going to be reporting. Now, they report to the Small Business Financial Exchange, right? And then the Small Business Financial Exchange shares that with Dun & Bradstreet. All right, so that's the reason. So if you have bad credit, or you just starting your business and everything like that, then these are the cards that you want to start out with, okay? Now, let's talk about loans. Now, just say that you did have a brand new business, but you don't have no revenue, but you have a good credit score. So a company called Brass Financial, they don't look at revenue. They don't look at the history of the business. All they look at is how good is your credit score, because they look at also your personal income. So they won't do a hard pull on your personal credit as well. So their loans go from $10,000 up to $500,000. You also have Seek Business Capital. Same situation. Theirs go from $10,000 up to $150,000, but you don't have to have no time in business, no business revenue, but you have to have at least a 680 credit score, and they're all over the country. They work with all over the country. Then you have ACCION. So if you do have bad credit, but say that you did have a DBA business, okay, and you're trying to get funding, all right, and you haven't structured your business in Florida yet or whatever, then ACCION, they may be able to help you get qualified for funding. The minimum is a 550, 575 is where they can probably cross the threshold. Now, again, you have to have revenue coming into the business. Now, if you're a new startup business, then you have to have a business plan with a 12-month cash flow projection, and you have to have a referral from either SCORE or Small Business Development Center. All right. So for those of you that may have questions of how to properly set your business up in Florida, or you need help setting your business up in Florida, click the link, check out 3-Way Funding, or go to HoustonMcMiller.net. Thank you.